In the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike because of the sentiment. The evergreen is hurting the sentiment and people don't want to buy. And other developer, because they want to get cash.
The growth story in cannabis remains very strong even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from New York, I'm Alex here with Guy Johnson over in London. This is Bloomberg Market. So one stock we're watching today is Southwest. The airliner down by about 2%, Guy. Basically, more capacity, not enough staff.
Yeah, there's not a lot of love going around with this stock today, is there? As you can see, down by 2.28%. You've got to get it in there. Yeah, look, they're blaming a bunch of things here, but it's been interesting to kind of follow this. And the whole issue of vaccine mandates within this business, I think, is something that the industry has not fully resolved yet. And I think Southwest is suffering for that. We'll talk politics next. This is Bloomberg.
They know me as Magnus TV in Facebook since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I'm playing almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. I'm a little bit worried about it because some people who join this Axie Infinity thinking that this is an easy money game. They can earn a lot on this game. This game can sustain their life, and I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for example, even 5 years, I think.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I am confident that what we need to do to come into compliance with the minimum tax will be included in a reconciliation package. I hope that it will be passed, and we will be able to reassure the world that the United States will do its part.
What else is going to be in that reconciliation package, I think, remains an open question. The Treasury Secretary speaking Sunday about her confidence in the passage of that global minimum tax deal that was done with the OECD. What comes next? As I say, kind of what else goes in that reconciliation package? Let's talk about this some more. Bloomberg Washington correspondent Joe Matthew joining us now. The administration gets a win with this tax deal, this global tax deal. The House comes back tomorrow. Can we expect any more wins for the president this week?
Well, you might be pushing it a little bit here, Guy. They still have to finish the work of last week, which was, I think, seen by some as a win, which was kicking the can on the debt ceiling, if you can remember back that far. And again, that would bring us to December 3rd, when we would potentially be facing another default. To your point, indeed, the House will be back, likely to vote on that tomorrow. Then it goes to the president's desk. And then guess what? We go back to the same exact debate that we were having last week, because we've now set ourselves up with a big old collision here of the debt ceiling now expiring. We'll hit the ceiling on the very same day that government funding runs out. You might also remember kicking the can on that. Government funding runs out December 3rd. Now we've got two of them happening on the same day, and a lot of lawmakers are wondering about their Thanksgiving plans here, because Democrats will likely have to handle this alone after the letter that went out from Senator Mitch McConnell to Joe Biden over the weekend. He said, look, I helped to buy you some time, as I paraphrase here, but we will not have any part in dealing with the debt ceiling from here. So the idea is another reconciliation bill that would do both, deal with government funding and raising the debt ceiling, or suspending it in that case for whatever period of time Democrats can agree on here. And that would help to avoid yet another collision on December 3rd. And by the way, I still haven't answered your question about reconciliation. That's how much still has to be done here by the end of the year.
And we didn't even mention the word infrastructure. And I wonder just how much the real and human infrastructure is going to play into that reconciliation. Bernie Sanders seems to be digging his heels into the sand about that $3.5 trillion. Now he's kind of weighing in on that, putting pressure on centrists.
That's right.
Where are we?
We're in the same place. I don't see that there's really any sunlight here in this debate, unless there are backroom deals that we're not hearing about right now. Progressives are dug in, to your point. Senator Bernie Sanders on the House side, Pramila Jayapal, who was tweeting over the weekend, we're not here to slow down or stop down. It's not time to stop in this debate, urging her membership, the members of that caucus, almost 100 strong, to hold the line on this. And I'll remind you that they're all home for the holiday right now, and many will be marching in holiday parades, maybe holding events with constituents. They're going to be hearing a lot about this. Those progressives who are holding the line on reconciliation are going to be likely encouraged by their voters to continue digging in. So when everybody comes back this week, we really hit the reset button here and start this debate all over again. The only thing that's really moved is the perception, at least, of a price tag, which is coming down quite a bit from $3.5 trillion and looks like something in the area of $2 to $2.2 trillion. But that could move again in the next couple of weeks as well.
Joe, great reporting, great color. Thank you very much. Bloomberg's Joe Matthew joining us there, and catch his show Sound On every day, 5 p.m. on weekdays on Bloomberg Radio. Want to get some more analysis? Terry Haynes, Pangea Policy founder. Terry, you had Joe kind of laying out where we are in terms of the 4 different issues: infrastructure bills and reconciliation when it comes to budget, as well as the debt ceiling. Give me your percentage that we get a human infrastructure bill and a real infrastructure bill.
Well, I think the real infrastructure bill is almost certain to happen, Alex. I would give that over 90%. What changes for markets is that it doesn't happen before December at the earliest, thanks to the president deciding to side with the progressive faction in his own party. So you've got that. I think I got a 60% likelihood that you get a human infrastructure bill at $2 trillion, but I'm still at 30% or less even that you'd get one anywhere near $3.5 trillion. There's no votes for that, frankly, and there's no leadership in the party, whether it be Biden, Pelosi, or Schumer, to try to force these folks together. These folks are now, as Joe alluded to, retreating to their corners and pandering to their bases rather than trying to come to a compromise, and that's not good for the big number.
Where does that leave tax hikes, Terry?
Well, I think you get some, but I'll say this Guy, three things quickly. One is that, you don't get the full boat tax hikes as part of a $3.5 trillion. I think you get a vastly shaved back $2 trillion. It's a little bit of tax hikes, a little bit of what they want, but basically half. But the thing I would watch out for, and I will not put a percentage on this yet because I think it hasn't coalesced yet, but don't discount the possibility of Democrats wanting to do the entire tax raises, even with the smaller number. I mean, so much of this is about taxing the rich and et cetera, et cetera, et cetera. It's going to occur to these folks at some point that they can actually do this in a way that is that helps with the deficit and debt if they tax full boat. I think Democrats do not ultimately agree on that, but it's yet another factor that makes things much more difficult to put together.
So, Terry, based on that, I'm really struggling to understand how an investor prices any of that. And what we learned from the agreement on the debt ceiling to postpone it is that stuff really matters. So even though we might say like, oh, long term, we know it's going to be fine. On the day-to-day market swings, all of those four things we're talking about matter. How do we price all of this?
Well, that's a little bit beyond my the competence to talk about.
You got it, Terry.
But you've got elevated political risk on all these things for months to come. Frankly, if what ends up happening is the Democrats are no closer, as Joe pointed out, rightly so. No closer today. They're not trying to compromise. They've gone back to their corners and are trying to convince people to do things that probably aren't going to be done. But what that does is create even more political risk and creates an increased likelihood of more short-term kick-the-can solutions instead of the certainties that investors look for. So I'd watch out for increased political risk into 2022, frankly.
Okay, well, let's talk about that political risk. You say that everybody's retreating to their corners. Who's in their corner battered and bruised? Who's looking good?
My take on this guy is very non-consensus in Washington. It's simply that the people who are losing right now, not losers, but who are losing right now, include Biden, Pelosi, Schumer, and the progressives. And the people who are winning are the Democratic centrists and Republicans, frankly. The reason for that is real simple. There's only one test that matters. Are you closer to getting what you want today, or are you not? And the people who aren't are progressives, because they're not going to convince Manchin and Sinema and the other people that are squirrely about this to move forward. They're not making the case to the country. They're not even in a situation where they can say what number they want and what programs they want with any specificity. Pelosi and Schumer have shown that they can't control those folks. Biden has shown that he doesn't have the ability to come in and close a deal. So the people who are winning right now are Republicans because they've kept themselves together on this, and centrists, frankly, are winning because they're making the case that the number on the human infrastructure thing needs to be a whole lot smaller and a whole lot more focused. So that's not a recipe for quick resolution.
No, not at all. And that's, of course, just ahead of the midterms. So, Terry, for the midterms, if what the scenario you just laid out continues to play out, it seems like the path of least resistance could be a Republican Senate or House or House. Does that increase or decrease political risk?
The uncertainty right now probably contributes to increasing political risk. I mean, we're an awful long way away from that. We don't have candidates. We don't have redistricting finished in a lot of places. This is a redistricting year, but in the House anyway. But as far as they're clearly giving Republicans a better shot at being able to flip the thing back. But I will say that, as I always do, majorities don't equal control. And, what we're likely to have, whether it's a marginal Democratic Congress or a marginal Republican one, is, the same kind of factional politics that rules today. The only difference might be Republicans may end up being able to deal with it a little bit better than Democrats have so far. But again, not something investors can bank on.
No. It's going to be tough to call the change and see exactly what the ramifications of it all are. Terry, we'll come back to you and we'll continue to watch what happens in D.C. with a great deal of interest. Terry Haynes, Pangea policy founder. Thank you very much. What do we got coming up for you? We're going to turn our attention to Hong Kong. Hong Kong's chief executive defending her COVID restrictions. Carrie Lam telling Bloomberg the city cannot become a, quote, weak link for infections. That exclusive interview next. This is Bloomberg.
At the low point of the Greek economic debacle, what were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms, and I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Todd McKean and I might be part of the reserve fleet
We might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh, my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Diversity of supply, and you always need a little bit of a cushion, because one thing about energy is you just can't turn it off and not suffer enormous consequences both to human beings and to industry and to markets.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Let's check in on the Bloomberg First Word News. I'm Laura Wright. The US has arrested a Navy Department employee and his wife for allegedly selling secrets on nuclear-powered submarines. According to the Justice Department, the buyer was an FBI agent posing as a foreign official. Authorities say the case involved cryptocurrency payments and a memory card hidden in a peanut butter sandwich. The US and the European Union plan to announce that at least 20 more countries will join a pledge to reduce methane emissions. Bloomberg's learned that Canada and Germany are among them. Methane is one of the most powerful greenhouse gases, but the UN has found that as much as 80% of measures to curb leaks from oil and gas operations can be implemented at no cost. The International Monetary Fund's executive board will deliberate today over the fate of its chief, Kristalina Georgieva. Directors have spoken with her and the law firm that alleged improper actions in her previous job at the World Bank. Georgieva has denied any wrongdoing. In Sydney, Australia, residents have been tasting freedom after 107 days of coronavirus lockdown. New South Wales state had been one of the world's most prominent success stories in containing the coronavirus. Then it fell under some of the strictest stay-at-home orders when the Delta variant hit back in June. Residents who are fully vaccinated can now start visiting non-essential retail, stores, pubs and gyms. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg. Alex.
All right, thanks so much, Laura. So I feel like there's two parts to this. One is that it's interesting to see how Sydney's dealing with that sort of zero tolerance policy. And if this last lockdown and the proof of vaccination really spurs vaccination take-up, of which it's been lacking because they were so successful at really containing the disease the first time, the virus the first time. And the second point, I finally ate indoors in a restaurant on Friday.
Wow, actually, that's probably the more significant point. Forget everything else. Alex this is one of those kind of indicators that we're all looking for. One of those markers that everybody watches out for. Finally, maybe actually there's some good news coming. The vaccination program is being rolled out. We're going to get to kids pretty soon. We've got therapeutics. That's fantastic news. I'm very happy that Australia is finally doing this. We've also got news of an Ashes tour this December. You have no idea what an Ashes tour is, though, do you?
No. Should I? What is it?
It's cricket.
Wait, they call it
we're
Ashes?
About to get the...
An Ashes? What? I don't get it.
So the first game that was ever played, they burnt the bales off the Ashes, and as a result of which there's a tiny little urn. It's only about this big at Lord's that the England and Australia play for. It gets very, very heated in a way that only cricket can do.
And
we've got the World Cup coming up.
That's cool. I got nothing for you.
You've got nothing to say about this, do you?
Nothing.
Alex has eaten inside. That's probably the big news. That's what we should take away from this.
I agree with that.
Yeah. We should kind of migrate this into what is happening into Hong Kong, because that's one of the other areas we've been watching so carefully. So Hong Kong's Chief Executive, Carrie Lam, over the weekend defending COVID-19 travel restrictions that are frustrating global businesses. Her comments signal curbs could stay in place, unlike the Australians, for the foreseeable future. She spoke exclusively to Bloomberg.
From the mainland perspective, is the practices adopted in Hong Kong should be as aligned as possible with the mainland practices. But they also accepted that we are operating under a very different regime. So the discussions between the two sides are meant to find a way forward that respecting the differences in the systems between the two places, that there could be assurance that we will not be sort of the weak link in terms of COVID-19 control.
For Hong Kong to remain a international financial hub, it has to be open not just to China, but the rest of the world. Are you concerned perhaps that your competitiveness will be impacted? Because Singapore is opening up and there's great competition between the two cities. Might Hong Kong lose its competitiveness?
Of course, I am concerned, and we are working very hard to resume normal travel in a gradual and orderly manner, both with the mainland of China and with overseas places. But as a chief executive in Hong Kong, I am also duty-bound to protect my people. So any fatality or increase in fatality will cause a major concern in society. So in dealing with the public health crisis, we have a lot of factors to take into account. It could not be just a single factor of a financial center. But coming back to financial center, I think Bloomberg knows better than everybody that we are doing very well.
A wall of worries for international investors, among them the anti-sanctions law. Lots of speculation. It's been delayed, whether or not it is on the back burner or whether or not it is dead. Talk to us about what's happening with the anti-sanctions law.
Now, first of all, the anti-sanctions law is a piece of national legislation. So there is a mechanism for national legislation to be applied to Hong Kong by an act of inclusion into the Annex 3 to the Basic Law by the National People's Congress Standing Committee. Secondly is nobody could dispute the extension of this law to Hong Kong if needed, because this whole round of sanctions by the United States arose out of Hong Kong. I am a sanctioned officer. I'm still an officer being sanctioned. So the time will come that if Hong Kong is put in that sort of situation, then of course we will follow the central authorities' direction to implement any anti-sanctions measures. The most important point is I have been given to understand that the anti-sanctions law at the national level is a toolbox. And in extending a toolbox to the Hong Kong Special Administrative Region, the central government will take full account of Hong Kong's unique status, especially her status as an international financial center. So the final point is I have no timetable.
That was Hong Kong's Chief Executive Carrie Lam speaking with Bloomberg's Haslinda Amin. Really interesting conversation there. This is Bloomberg.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
I'm Laura Wright with the Bloomberg Business Flash. Chevron has set a goal of net zero emissions from its own operations by the year 2050. The energy giant is responding to rising pressure from investors and society to play a bigger role in the change to a low-carbon future. It's the first time Chevron has outlined such long-term strategic commitments on emissions. In Vietnam, factories are running out of workers to supply companies such as Nike and Gap in time for the holiday shopping season. It's estimated that as many as 2 million workers will flee the country's industrial heartland in the south, the epicenter of Vietnam's worst coronavirus outbreak. In response, factories are boosting pay. Vietnam is the second largest supplier of clothes and shoes to the United States. The new James Bond movie opened as the #1 film in North American theaters. Still, No Time to Die fell short of the pandemic-era opening record set last week. The movie took in an estimated $56 million at the box office, not as strong as some were predicting. Guy, Alex, are you going to miss Daniel Craig?
Oh, most definitely. I have to say, my husband and I had a heart-to-heart after the last Bond movie, and we both decided that we like Daniel Craig best as the best Bond. Am I allowed to say that? Like better than Sean Connery?
It's controversial. It's very that's a very controversial thing to say. But I had a conversation with somebody at the weekend that suggested that George Lazenby was the best Bond ever. So everybody has their different opinions. I couldn't be further away from that one.
But yeah. So to me, then, and this was what everyone's talking about, is who's going to be the next Bond? How are they going to do it? Particularly because the 007 in this movie was an African-American woman, so are they going to really spice it up? So earlier on the early edition of Surveillance, they were kind of messing around. They had their own idea.
The question is, I'm not going to wade into your argument there. I just am focused on who the next James Bond is going to be, because we still don't have answers. We should put out a poll on Twitter. Everybody take a vote.
Guy Johnson. I think it should be Guy Johnson.
Perfect. And then you can be his sidekick, Matt Miller.
Yes. Would you do it if your country called you? Would you do it?
Of course. One obviously has no aspirations in that direction. But if the call came, one would certainly deliver upon one's duty and serve. Nevertheless, but I have to say, if I'm going to do it, Matt's got to do it as well. If I'm James, he has to be Felix. But yeah, I think there are a lot of things left on the table.
He's not as organized. He's not as organized as Felix.
Felix isn't that organized. Felix is reasonably organized, but I think Matt could deliver a good Felix. Or he could be Q, because obviously he knows his cars, he knows his motorbikes.
Q could be Q.
So he'd be into the gear. But I think the DB5 is definitely mine. That's all I'm saying. If I get the gig, Matt's going to have to step away from that one. I'm glad the movie's doing well. I think it was a fantastic way to finish the sort of the DC era. But yeah, we'll see what happens next. You're giving away spoilers there already.
I didn't.
Yeah, you did.
Everyone knew this was the last Bond movie.
No, but they didn't know 007. That's one of the big kind of things that changes in this movie, which opens the door to a lot of things potentially changing going forward.
Sure, but like if you read anything, you'd probably find out about the 00 situation. I'm just saying.
Sure. To be honest, before this movie, I stuck my fingers in my ears and said, la, la, la. I didn't want to hear anything about it.
I don't think James Bond would do that. He would not do this.
No, he wouldn't, which probably is why maybe I'm not up for the job, despite Matt's thinking it's a good idea. I think it'd be a lot of fun. I have
you
to
don't
say,
even like
Craig's only
martinis. You
53.
can barely drink your beer at the pub. Forget it. You're toast. You're out.
What? That's outrageous. Jeffrey Yu is going to defend me next. He'll join us from Bank of New York Mellon. This is Bloomberg.
The 1972 Madison Square Garden eyelet jumpsuit, which is arguably, from what we're finding out, probably one of the most important jumpsuits of Elvis's entire career. So it marked so many milestones, really, for him. It was used for an album cover. It was used when he performed Madison Square Garden, and he was the first performer to ever sell out 4 nights straight in Madison Square Garden. So he really started that whole thing that we see now in pop culture, where when you make it big, you do Madison Square Garden. So we're super honored to have it. I can honestly say that COVID has been unbelievable for internet-based and e-commerce businesses, because we have a captive audience. We have people home that really want something to do and need entertainment, so we do our best to try to give it to them.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What I hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Monday the 11th, 30 minutes to the close. What do you need to know out of Europe? Gilts continue their sell-off. Traders betting that the Bank of England will now hike by the end of the year. Governor Andrew Bailey, Michael Saunders over the weekend highlighting their concerns over inflation. The London Metals Exchange looks to step from futures into physical markets with a partnership with Metals Hub. We're going to be joined by the LME CEO, Matt Chamberlain, to talk about that partnership and the return of a scaled-down LME week. There's going to be some parties in London this week, though. And ASOS falls out of fashion with investors. This is a management shake-up, sees the company's CEO, Nick Baton, stepping aside. Supply chain issues forcing the clothing retailer to issue a profit warning today. The stock absolutely getting slammed on the back of that one. Let's take a look at where stocks are more broadly. Equities absolutely flat today, going nowhere. Remember, the bond market is closed stateside. Brent crude, though, Alex, your bailiwick, up by 1.8%.
Unbelievable. And WTI actually outperforming, up by over 2%. So here in the U.S., like you mentioned, the bond markets are closed, but I wanted to highlight energy and bank index because the cyclicals are totally in charge of the S&P. Freeport still the best performing stock within the S&P, and energy, to your point, outperforming over 1%. KBW bank index still up by 0.6%, up some like 40% so far this year as we head into bank earnings. What's priced in? The whole raise and beat or lower and beat and then raise and beat model, like that's all going to go by the wayside as we try and take into account loan demand as well as input costs. And even though the bond market's not trading, the futures market is. So this is the TYA, which is the 10-year bond futures index. So a little bit of selling here. Yields probably pushing a little bit higher. And to your point, we'll be talking to the CEO of the LME. You have aluminum up by 2.8%. We haven't seen these levels in like 13 years, continuing to grind higher. I really worry that we're going to, at some point, that's going to come into bite margins. And we just have to wonder how long the demand's going to hold up until the margin squeeze becomes very real and needs to be priced in.
We're going to talk more about energy in just a moment. The industrial sector over here in the UK really worried about the lack of availability, potentially, of energy. You're going to see demand destruction, potentially. We'll wait, we'll see what happens, but it's a risk. And it's certainly something that the Bank of England is monitoring very carefully as well. That inflationary narrative becoming more and more part of what the bank is talking about. Over the weekend, Andrew Bailey warning of a potentially, quote, very damaging period of inflation unless policymakers take action. He wasn't the only one. MPC member Michael Saunders also suggesting investors were right to bring forward bets on rate hikes. Here with more on this story, Bloomberg News' Ven Ram. Ven, we've already seen to a certain extent the market front-running this. The market has been out in front. It's looked at what the bank was saying and said, you know what, actually, we think there's a bigger risk than maybe you're letting on. The bank is belatedly starting to catch up. So how much of this potential rate hike news is already in the price?
Good afternoon, Johnson. I think there's plenty of the BOE tightening already priced into the market. If you look at the two-year gilt yield, we are now around 60 basis points. Essentially, that means that the spread between two-year gilts and the bank rate is 50 basis points. So, and this spread as traditionally presaged and positioned very well ahead of BOE rate hikes or rate cuts in previous cycles. So, in other words, this spread is now telling you that the markets are very well prepared for two rate hikes at the very least that will take the bank rate to 50 basis points. And you know what? I think that gilt yields have more to search, albeit a limited room to search from here, because there is nothing to stop the markets from positioning for a third rate hike. Though I do think that the pace of increase in gilts that we have seen, in gilt yields that we have seen, may need to moderate going forward.
All right, Ben, thanks a lot. Really appreciate it. Having some connection issues there, but we appreciate you staying with us. Ben Rem joining us from Bloomberg. And it is also the story that will never, ever go away, and that's Brexit. Britain is now headed for a clash with the European Union this week over the border controls in Northern Ireland. Here with more is Joe Mays, Bloomberg News UK government reporter. Joe, what's the latest here?
Yes, we've got a pretty big speech being given by Brexit Minister David Frost in Lisbon tomorrow, where the tensions are just ratcheting up once again. We have the UK saying that the Northern Ireland Protocol, that part of the divorce treaty, which was designed to stop hard border emerging in Ireland, the UK says that needs to be fundamentally, significantly changed, because they say it is causing disruption to trade between Great Britain and Northern Ireland. Now, the EU is saying, well, we're trying to come up with practical fixes to make the protocol work better. But the UK sign is that they say this is not enough. We need fundamental altering of this protocol, and that's something the EU doesn't seem to want to give. So I think that'll be the key message from Frost tomorrow in Lisbon. And the key question is, how would the EU react to that? Will they be willing to give way on key issues like the governance of the European Court of Justice of the protocol? That looks unlikely. If they don't give way, the UK is essentially saying, well, we're going to suspend parts of the protocol because we don't think